At the time of recording this video, PayPal stock is at just around the $60 mark, meaning the stock is at a similar price to what it was at 6 years ago in 2017. Now, I know this stock isn't a dividend stock, so it's kind of weird to talk about it on a dividend YouTube channel, but this current price makes it an extremely interesting stock to look at right now because this can very easily be a value play for us investors, or it could truly signal that this stock has big issues. Because of this, in this video, I'm going to discuss whether I think PayPal is a good stock to add to your portfolio right now as a growth tech stock, or whether you should avoid it or maybe somewhere in between. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. Historically, this online payment giant has made for a pretty horrendous investment, with it being down 80% since all-time highs and down 15% just this year. But if you asked investors 2 years ago what they thought of this stock, they may have said it was their best investment. So why is this and what happened? Well, firstly, PayPal is dealing with a huge slowdown of revenue and growth because both of these figures were at huge highs, boosted tremendously from the lockdown. Since people were stuck indoors, most people bought stuff online, which meant that PayPal was used much more frequently and benefited from more transaction fees. In addition, in 2021, PayPal was perceived as an unkillable giant in the e-payment world. Most people thought the company could do no wrong, which obviously is not true. This skyrocketed the stock in 2021 to over $300, or basically 5 times what it is currently at, and because of this recent massive drop, it now sits at a P ratio of about 17, which is historically very low. Investor expectations because of the lockdown were massive, but because of PayPal's slowdown and inability to reach these expectations, market pessimism has been growing at a fast rate. Some of these unachievable expectations were created by the company, but most of it was created by the investors themselves. This means the story surrounding PayPal stock is overwhelmingly negative, which is just one of the reasons this stock has tanked. However, the biggest issue that PayPal has is dealing with a highly competitive market. For a long time, PayPal was the king of e-payments and enjoyed dominating the space with not a huge amount of competition. However, recently, this sector has become more and more contended. Even companies that aren't traditionally fintech companies, such as Apple and Google, are stealing space away from PayPal with Apple Pay and Google Pay respectively. Because both of these payment systems are super easy to sync up with your phone, it has been hard for PayPal to compete at the same level of these two giants, and they've lost precious market space because of it. Even Venmo, which if you didn't know is owned by PayPal, is also facing stiff competition from Block, ticker SQ, who owns Cash App. These two companies have performed similarly poorly recently, and it can be said it's due to them fighting with each other for market space. Even PayPal's merchant side of their business, Braintree, has big competition from Shopify, ticker Shop, and Adyen. These rivals that PayPal has are no joke, and once a potential customer starts doing business with one of these rival companies, it oftentimes becomes convenient and easier for them to stick with their current company than to ever switch to PayPal. Because of this, even if PayPal is at the top of their game, which they need to be in order to combat their competitors, there is still uncertainty about PayPal's future market share, which has been a nightmare for investors. Now, I'm going to delve into some of the upside for PayPal stock, and believe it or not, there might be some good news. Firstly, as I mentioned before, PayPal's PE ratio is historically low at under 20. At its peak, PayPal's PE ratio was at about 80, but that was during the lockdown when optimism was high. I'm not saying PayPal's fair PE is 80, but 20 does seem low for this major player. In addition, PayPal will be getting a new CEO for the first time since 2015. This is a good sign for investors, as many critics claim that current CEO Dan Schulman has made some not so great moves by acquiring Honey and Payday in the past for $4 and $2.7 billion respectively, when he should have just focused more on PayPal's core business. In addition, Schulman lost much credibility when he set out some lofty goals for PayPal to hit by 2025 and quickly backtracked on them when he realized that their growth from the pandemic wasn't sustainable, which ties into those super high expectations that they simply couldn't hit. New CEO Alex Chriss could bring a much needed fresh perspective to the table, and he also could use some of his cash on hand to prioritize PayPal's core business rather than non-necessary acquisitions. He could also use this money to begin repurchasing PayPal stock, as it is extremely cheap, which could be a good play for all investors and PayPal itself. In addition, PayPal reported earnings recently and they saw a growth in revenue, profit margin, and transaction fees. Basically, everything is growing year over year. This is very important to note because although the growth isn't insanely large, it still is a factor and could show that PayPal is being crushed by investor fear, but not by the actual business, which ultimately will show in its long term performance. Ultimately, I do believe PayPal is super cheap right now in both price and in PE ratio. However, it is hard to make a great argument for PayPal currently as its market share is becoming increasingly hard to grow and revenue growth has been slowing. In addition, I personally won't be picking up any PayPal stock at this time because I am following a growth dividend focused portfolio and PayPal doesn't offer a dividend, and let's be serious guys, they probably never will. For people with a bit more risk tolerance, this stock could be an absolute fantastic value play and it might be near its absolute bottom, but it could also continue to underperform the S&P as it has for the past months and even year. Thank you for watching. Goodbye.